Well, hello everyone. Don Garman here again with Jackson Vickers from Mirador Capital Partners. Happy New Year to everybody. Happy 2025. Here we go again. Wanted to check in. I feel in some ways like even though Jackson and I were, and everybody here were working away last week, I feel like certainly judging from the traffic chatter this morning, the rest of the world went back to work today. Um, but we are feeling enthused and excited about the year ahead. And so wanted to share some thoughts with you, obviously, about the market and positioning. I like to answer the question that I get asked the most often. And so the meetings and conversations and text over the last week or two, particularly the last 2 weeks of December, which were noticeably less pleasant than what we had gotten accustomed to before, led a lot of people to reach out about the outlook, the stock market outlook specifically. So we can look back on 2024 now in a lot of ways as a tale of two markets, right? We had the largest companies, the biggest dinosaurs that roamed the earth, sort of carried the day on the index level for 2024. Certainly, we caught our fair share of that. However, it left a lot of the things that were not those 7 or 8 or 9 or 10 stocks out of the discussion largely, many of them ending up down for the year last year. So, what is common in these times is that people will reach a level of frustration and start to take out the things that haven't worked and double down on the things that are, quote, working. And then we march ever closer to a tipping point. So I want to at least describe to you what I feel like the tipping point could be. The old saying, and you guys know I love my metaphors and sayings and jargon, but as is common in our business, one of the sayings is, it's not what you don't know that gets you. It's what you think you know and are wrong about that will get you. And so, what I think this year so far has demonstrated is we have great optimism about the new administration and efficiency and costs and spending at the government level. And we're feeling tension because the immediate needs of the government to fund itself will be producing enormous amounts of treasury issuance, which is basically the government going out to borrow more money. And in order to do that, the interest rates are rising, and they need to rise to find new buyers or new demand for those bonds. So what's scaring the market right now, and particularly tech stocks, is the 30-year treasury rate, the yield on the 30-year treasury, and the 10-year are the highest that they've been in quite some time. And this is right after the Fed cut rates a couple of times last year and then signaled we are pausing potentially, and there will be less rate cuts in 2025 than we had previously signaled. So that was really the turning point in December when the Fed met and said, we're gonna take a little bit of a pause into 2025, leave rates perhaps higher for longer. And what that did, the market responded in a lot of ways the opposite that people were hoping that it would respond. So short story, rates I think are going to be the tail. If somehow the 30-year touches 5 and it's pretty close, or the 10-year touches 5, people are going to get very spooked. So what I want to say about 2025 is, and I've tried to be pretty clear about these moments, these forks in the road in the past, expect more volatility. 2024, despite all we endured, including and up through the election, was relatively light volatility. And even when there was a little volatility, we felt it from clients. There was a lot of immediate concern about, oh my goodness, and even though the percentage declines from any particular point weren't very large, I can tell there's a high degree of sensitivity. So in 2025, my best hope for you and advice would be to try to inoculate yourself somehow to the daily volatility. And while it's unnerving to hear about index volatility and the market going down, take an extra moment and look at your actual account in these times. Today would be a good example. You have, the S&P and the NASDAQ down many times as much as the core strategy that we run is being affected today. So a lot of ways, it's a tortoise and the hare story. It's a win by not losing story. It's a consistency over, more of a lurchy approach. So that is what I would convey. Jackson, do you have anything to add to that?
No, I think that's very well said. I mean, now is going to be a great time, especially moving forward, to have a diversified strategy like our core strategy, especially with concentration at the index level. So,
Yeah. Yeah, I think that's also well said. So, in addition to that, Jackson and I and others here, I think, led a discussion about 1031 exchanges maybe 2 months ago. I didn't anticipate the level of interest among a particular subset of our clients that hadn't really engaged with us around these topics before. So, all I want to say about this, if you don't know what that is, it maybe doesn't apply to you. But if you are a real estate investor and have a large part of your holdings in income producing real estate or rentals, and the management of that has gotten to be a burden, reach out, because we have a solution that we have had that I didn't know everybody didn't know we had for a long time. And all of a sudden, I think the tension around the management or the economics of continuing to manage these things on the family level the burden has started to overwhelm the benefit. And we have a great solution for that can continue to defer the taxes, that in almost every instance we've seen increases the income that you receive and gets you out of the management business, which are all good things. So we can talk to you on a case-by-case basis. The topic is real estate or income-producing real estate, rental real estate. And if that's an issue that you want to discuss, please reach out, as a lot of you have. And then the third thing I want to talk about, Jackson, is can you just talk about the interest we've had in the financial planning offering and estate planning and how you're thinking about 2025?
yeah, absolutely happy to. I think if I could start with the intersection between the 1031 exchange and the financial planning, we've already seen, you and I, two or three cases where the increased income produced by the 1031 exchange offering has been a game changer for individuals and families' financial plans. So I think that's a great opportunity for our clients into 2025. We've expanded our financial planning capabilities again with a new software that we've integrated. So the capabilities are much larger on a cash flow level. We're getting more granular and more detailed, reducing that leakage in your financial life, which is crucial to long-term success. And then I think that ties in with the estate planning that we also have, providing our clients with a basic level of estate planning that keeps their assets out of probate should the worst happen. So that's a great thing to provide to our clients and something that has been well sought after by all of
Mm-hmm.
our clients, and I think we'll
Yeah.
continue into 2025.
Yes. And if you haven't had a chance to work with Jackson, I get extremely excellent feedback. So if you want to engage him in financial planning or this estate planning discussion, I would encourage you to do so. The last thing I'll say, and we'll leave it at this for this time, is the team, the capabilities of the team, and our ability to deliver an extremely high level of personalized service, very boutique level service, has never been better. The competencies within the firm have never been greater. So, and we are moving through a period of tremendous growth. And so, what I want to say is, our duty to you is to continue to staff the firm with the very best people and to make sure that as your needs become more sophisticated and you know acute, we are prepared to meet you at each one of those points and deliver solutions that make your life easier. So we will continue to do that, and we will continue to invest heavily in that as we go forward, should we continue on the path that we're on. So fingers crossed to a great 2025. Do expect more volatility. We are well prepared for it. Just check, and you can see the quietness. I refer often to the quietness of the ride. We can't promise that we won't ever drive through a sleet storm or through a windy road or potholes here and there, but we are moving and making progress on the journey. And that's the very thing we will insist on, is being as smooth as possible through the inevitable weather that we're going to confront. So on that note, Happy New Year. Thanks again. Thank you, Jackson, for everything. Looking forward to a great year. And he will be my more frequent guest, as it's always nicer to chit chat with somebody than to stare into that little screen up there and talk. But anyway, Happy New Year, and we will talk to you soon next month, if not sooner. All right. Thanks,
Happy New
everybody.
Year.